Hello and welcome. You're watching Business Today TV. I'm Sakshi Batra and this is Market Today, a show where we talk about the latest trends of the stock markets and also help you really understand which are the stocks that are perhaps buzzing in trade and what could be your perhaps approach to the stocks and what should be the ideal way how you should be approaching the markets as well. And joining us will also be a very special guest on the show. But first up, let's look at how the markets are trading at this point in time. Well, halfway through, we're still hovering near the flat line. There is a bit of choppiness that you can see on the markets. 150 points down for the Sensex at 61,646. Also the Nifty hovering near that flat line, below that flat line too. 16 points gone there. 18,332 odd kind of levels is what you're seeing. But the markets are still choppy. We'll have to see whether the last 2 hours bring up any kind of a bounce from these kind of levels as well. Now let's look at how the market sectors are also doing at this point in time, where the pressure is building up from and what's really doing well in the markets. Well, if you see, it's perhaps a kind of a mixed trading session that you see in terms of the sectoral moves today. 0.5% uptick for the realty stocks, 1.5% uptick for the metals. Those are shining bright in trade. 1% up for the IT sector, and the auto sector is gradually moving in a faster lane in today's trading session. What's not doing well is perhaps the banks that are seeing some profit booking taking place from last few odd trading sessions when we had seen continuous run up right there. 0.5% downtick for the PSU banks, private banks down by 0.3% odd. Financial services also seeing a decline somewhat, and the FMCG stocks are also down by 0.5% in today's trading session as well. So it's a mixed trade, like I said, and advanced decline ratio on the Nifty also suggests 28 stocks in the green, 22 in the red zone in today's trading session. What's doing well today is from the metal pack. Hindalco, top of the radar as far as the Nifty index is concerned, 4.5 to 5% up in trade. Tata Motors and Apollo Hospitals, Grasim, Tata Steel, those are the other gainers. 1.5 to over 2% gains is what you can see there. On the downside, however, it's Dr. Reddy's that's seeing a sharp decline of over 4% today. HUL, ICICI Bank, Bharti Airtel and ITC, the other stocks that are dragging by over 1%. Let's welcome our guest for today. Mr. Siddharth Khemka joins in from Motilal Oswal Financial Services. He's the head of retail research there. Welcome, sir, and thank you so much for taking the time out. Well, the markets, we've seen some sharp move just when we headed on to the weekend. We've started off on a muted note in this week. What are your thoughts on the markets and how do you see them panning out?
Yes, so thanks for having me on the show. So if you look at the market construct, I think the sharp momentum that started with the festive season, that is kind of continuing. And we have seen the reversal in the US markets, which is the mother market. And the good part is now the FIs have also turned positive. They've been buying for the last 10 consecutive days. What we are seeing in the market today is what we call the nervous 90 phenomena, where the market is inching closer to its previous all-time highs of the 18,600 mark. And there is some cautiousness before that. But our expectation is that with the kind of sector rotation that we are seeing now, the IT sector is back in momentum. We are seeing some interest in metals, cement, banking continues to do well. So I think these sectors can take the market to its previous all-time highs and then gradually to a new high towards the 19,000 levels.
Okay, understood that. But on this show, we're going to be focusing on something special. Apart from the markets, there's going to be one stock that we are going to be discussing. Now, we do know that overall, so far this year, the Nifty and the Sensex are up about 5% odd. But there are some stocks that have really outperformed the markets by a wide margin. And among them is a very interesting stock. One, which has rather been a well-destructor in the last decade or so. But seems like the tide is finally turning on this one. I'm talking about the state-run company, Coal India. Remember, Coal India shares surged to their highest levels in nearly 3 years last week after reporting those second quarter earnings, and that beat the street estimates also on. Now, the shares are one of the best performers on the Nifty index so far in 2022 on a year-to-date basis. Remember that Coal India reported doubling of the September quarter net profit on a year-on-year basis. That also, and what also really contributed, e-auction realizations for the company that has also touched a record high level as well. Now, what does this really mean for India's largest coal producer, the shareholders and the prospective investors? That's what we will focus on this show. Mr. Khemka, your thoughts on the kind of earnings that Coal India has reported. Also help us understand, do you believe that post these earnings and post this record high number that we've got of the e-auction realizations as well, does it really set the stage for a solid FY23?
Yeah, Sakshi. So, if you look at the market seems to have found value in these old economy stocks, and especially given the global geopolitical issues that is plaguing the entire world energy demand and supply. So, if you look at what Coal India has done, it is reported a very strong Q2 earnings. E-auction premiums were at all-time high. Of with the premium at an all-time high of almost 330%, which drove
Hmm.
the strong performance. The net sales were up 28%, which was driven by a 23% growth in the blended average selling price. As I said, mainly the growth in the e-auction price, and also a 5% growth in the total volumes.
Hmm.
Now, these strong numbers in Q2, we now expect a solid Q3 FY23 results from Coal India. We are expecting the revenue to increase by 25% to 1.4 lakh crore, while the net profit is expected to see a jump of almost 90%, record 33,000 crores.
Right. Absolutely. Also, I wanted to understand from you, say, for example, when we're talking about the e-auction realizations, touching record levels, would you say the e-auction realizations may be near its peak now?
Yeah, so the e-auctions, if you see the average selling price has grown 280% on a Y-on-Y basis, and also 40% on a sequential basis, and is roughly about just ahead of 6,000 rupees per ton. This is, as I said, is a record premium of 330% over the FSA price. While we are expecting these prices, the record prices to sustain, as we see that Europe continues to buy more and more of the South African coal. To the shortage of high grade thermal coal in India, and hence we do expect the coal premium, the e-auction coal premium prices to sustain at these levels.
Okay, so that's going to be a good news that, perhaps these, realizations could, extend and remain and sustainable going forward from here. But from the valuation perspective, what do you see Coal India really trading at currently?
Yeah, so as you rightly said, production for Coal India, the stock had seen sharp downtake and well destruction over the last
Yes.
couple of years, and was trading at a very cheap valuation. But even after the move that we are seeing in 1 year, the
Yep.
stock trades at a very inexpensive valuation of about 4.5 times 1 year forward EV/EBITDA. Now that compares to about 7 times on a 1 year forward long-term average
Mm-hmm.
for the company. Even on a
Okay.
price to book, it trades at 2.5 times and looks attractive, given the company likely to report record profits for FY23.
Okay, understood that. Now, also, if you talk about, like, post the earnings, have you revised the targets for Coal India at all at the company level? Like you pointed out, the stock is already up about 70-75% this year so far. So that's like a sharp up move. So what potential upside do you really see from the current levels?
Yeah, Sakshi. So we have upgraded both the estimates as well as the target price. So we have raised our FY23 estimates by about 20-25%, and for FY24 by about 3 to 5%. Consequently, we have also raised our target price to rupees 325, uh, which was earlier to 265. We are now valuing the company at 4 times FY23 EV/EBITDA.
Mm-hmm.
Mind you that we are expecting a record numbers from Coal India in FY23, and this upside is underpinned by that record profit that the company is likely to report in this year.
Okay, record profits to continue buoy the sentiments for the company going forward as well. We also know that the board has approved an interim dividend of 15 rupees per share, and this is for the first time that an interim dividend and such a high interim dividend has been, reported and announced. The record date for this has also been set on as of November 16. Could this mean that there is a likelihood of a strong dividend yield in FY23?
Yes. So given the record profits and the very high cash that the company is generating,
Hmm.
the company has announced an interim dividend of 15 rupees. For the full year, we are expecting the company to announce another 10 to 11 rupees.
Okay.
So for the year, we are expecting a dividend per share of about 26.7 rupees,
Hmm.
which should be on back of the strong cash generation that the company does in FY23.
Okay, so there's a lot more to look forward to as far as the dividend move is concerned. Do you see this as a big positive for investors who have been holding on to the shares? And would you also advise new investors to enter these shares before the record date to get this benefit of both interim dividend and those that may follow as you expect?
Yes, definitely. I think these kind of record dividends are not to be seen generally. And especially for the conservative investors, for the value investors, this is a good opportunity as we are expecting a very strong dividend yield of more than 10% at
Hmm.
current prices. So it's attractive definitely for some of the conservative investors and value investors.
Okay. And how do you really see the demand conditions unfolding going forward, especially when on the one hand, we do see that winter's power demand could actually soften, but globally there is still a shortage?
Yeah, so if you look at from an India perspective, with the onset of winters, the demand for coal from the power sector should definitely slow down. But
Hmm.
that will give some headroom for to Coal India to free up volumes towards the non-power sector as well as the e-auction dispatches so volume. So that is positive for Coal India, given that the non-power and the e-auction has a higher selling price, and where this should help overall the company to report a 5% volume growth over the next 2 years. So we are expecting about 500 million tons of volumes for FY23 and 535 million tons of volume for FY24 for Coal India.
Okay, and globally, what kind of opportunity can Coal India really look to tap looking at this energy shortage in Europe? Is that going to be a long drawn kind of a benefit that Coal India can garner?
Yes, actually, so definitely it's a key question given that last several years there has been a focus on ESG globally.
Yeah.
However, what looks like that the world has come to terms that fossil fuels cannot be ignored, at least in the
Okay.
near term. There has
Mm-hmm.
been underinvestment by developed economies, especially towards the alternative sources. Now that there is a geopolitical conflict with Russia, this non-availability of the Russian natural gas is there, and there is no other alternative to coal that the Western world looks at. And if you
Yeah.
look at the renewable energy, there are issues with respect to availability, cost, storage, safety. As a result, we believe that the world's dependency on coal is likely to increase, irrespective of whether investors prefer it or not.
Okay. Just to continue this point forward, how big a threat could it be from these environmental issues for a company like Coal India, as there is a growing need, like you pointed out, for renewable energy? But at COP27, we also saw that how India batted for phase down of all fossil fuels and not just coal. So what could this mean in the long run?
So yes, in the near term, as we discussed, there is a shortage of the clean energy. There is a shortage of or non-availability of the renewable energy to match up to the demand. So there is a huge bump up to the fossil fuel like coal. However, in the long term, the world is gearing towards the ESG, the environmental concerns could lead to a softer long-term demand. But as I said, the world can not ignore the demand for coal, and coal would continue to power the demand from, especially from the key sectors like power, your metals, refineries, fertilizers. So I think there would be a steady demand over a long term, although uh, the alternate fuels and clean fuels would eventually have to be would come up and see more demand because the world would gradually shift towards the cleaner fuels.
Right. So if you could just help all our viewers really understand the key factors that could continue drive the upside for Coal India going forward, and the key challenges that one must keep in mind in case one is keeping an eye out on this stock, and as a potential investor one continues to keep adding in this kind of a momentum as well. What are the key factors and the challenges that one must keep in mind?
Yeah, so basically to sum up, Coal India continues to show a sharp uptick in terms of volumes as well as average selling price, given the shortage of coal globally and high demand led to because of the shortage of the cleaner fuel like natural gas and crude from Russia. In India, also the demand has consistently gone up from the power sector and some of the other sectors. The stock trades at a very comfortable valuation, offers good cash generation and dividend yield. Valuations are inexpensive, and the near-term growth could support the valuations as well as the stock price. For a long term, we expect it to be a steady dividend yield stock. Could not. So these are the things. The concerns would be that gradually over a longer term, the cleaner fuel will take over the volume growth, and Coal India could kind of report a steady 3 to 5% kind of a volume growth, where the valuations could also languish for a long time.
Okay, and then final question on Coal India to you. You know, just like how we started off this conversation with a stock that has been an absolute wealth destructor for investors for over a decade. Finally, can we actually see Coal India turning into a wealth creating stock in the long term for investors?
Yeah, Sakshi. So we have already seen Coal India generating some kind of wealth in the last 1 year. And given the near-term challenges globally, I think next 1 to 2 years, definitely the stock could continue to create wealth, both in terms of absolute as well as in terms of the dividends that the company could announce. Over the long term, as I said, one needs to be keeping in mind that this is a fossil fuel and the world is gradually moving towards the cleaner fuel. So it's may not be a long-term wealth generator, but at least in the next 1 to 2 years, the stock could continue to generate some wealth for investors.
Okay, understood that. Well, thank you so much, Mr. Khemka, for being with us and sharing with us all those insights on Coal India, what is powering the stock right now, what could continue working for the stock and for investors over the next 1 to 2 years. Definitely, this stock could be on your radar in case you are an energy enthusiast and this stock is something that you've been tracking, holding on to patiently, then definitely some good days ahead for you. Thank you so much for being with us on this show. Let's move on to see how the markets are trading at this point in time. Still slightly down as far as the index is concerned. Nifty is hovering near 18,324, down about 25 odd points. 186 points gone there for the Sensex right now, and 61,610 as the current level for the Sensex as well. So that's a kind of a deeper cut that you can see between the two indices. It's the Sensex that's down about 0.3% at this moment. But we'll keep you posted with everything that's developing on the market. So do stay tuned on to Business Today TV. And don't forget to stay tuned with us onto the other platforms as well. On social media, we are present on Facebook, Twitter, Instagram, and also LinkedIn, where you can also suggest your ideas, your feedback, and we can definitely come up with some of those ideas and those expert tips also for you on Business Today TV. Thank you so much for tuning in for now.